Hi, welcome. It's Mary Ellen McGonagle with your Friday afternoon weekly Edge show. I'm the Senior Managing Director of Stocks here at Simpler Trading. And in today's show, as always, it's all about helping prepare you so that you can outperform the broader markets. Let's take a look at what we're going to be covering today. I'm going to take a look at the current markets, make sure that that backdrop is healthy. And then from there, I'm going to uncover pockets of strength that are just now materializing, and then ways that you can capitalize on that strength with individual stocks. Before we get into that, I always like to share the economic backdrop. There were some headline news last week, items that really did impact the markets. First up, the Senate did pass the $1 trillion infrastructure bill, and that in turn pushed a number of infrastructure-related stocks higher, a lot of industrial materials types names. We'll get a little bit into that as we move on. And then inflation data, we had two separate reports. The first one, that consumer price index, came out pretty muted. That was good. However, later in the week, producer price index, those numbers surge, what in turn brought back inflation fears. Overall, however, cyclical stocks did outperform. Materials, financials, industrials were better than the markets, and by a pretty wide margin. Also, on the data front, weekly jobless claims dropped. That was good news. However, consumer sentiment dropped dramatically as consumers are focused on the continued spread of that Delta variant, so that really put a damper on the markets later in the week. Next week, we do have retail sales numbers coming up, industrial production, and then several housing-related data items that could easily impact the markets. So from here, let's go ahead and take a look. I'm going to share with you a daily price chart of the Dow Jones Industrial Index. And I'm sharing this because it was the outperformer last week, with the index hitting a new high, and that's all about that move into cyclicals, financials, industrials, and so on. We can see the RSI on this daily chart is above 50, trending higher. Your stochastics are also in positive territory, and I will tell you that the S&P and NASDAQ are also in uptrends. So we have a nice, healthy backdrop as it relates to the broader market. So from here, let's drill down. We want to get further into where the markets are finding strength and what's going on as it relates to these different sectors. So here's what's a nice 2-month daily price chart of the 11 sectors. So I've gone ahead and added this RSI. That's a relative strength indicator. I'm going to sort it in descending order. I want to see where the strength is on this upper left quartile relative to weakness down here, the lower right. So first up, we can see that utility and staple stocks are showing up strongly. Now, normally that would be viewed as a defensive stance among investors, but there are other dynamics at play here. Utility stocks, they're coming in with their earnings this month, but in addition to that, they do offer a higher yield, as do staples stocks. And in the face of inflation, higher yielding stocks can be a nice defense against that. So as we move on, I also wanted to point out to you that this move into financials that we identified last Friday with our weekly show has continued to advance. Financials up 2%, a number of underlying stocks up very nicely. For those of you that haven't already, take a look at my MEM Edge report. I have a special trial, and you'll get in front of some of those better poised stocks in the financials. So from here, let's take a look, because technology was flat. However, it did recover from a midweek pullback, which is constructive, still in an uptrend. However, we're going to drill down further as far as areas of strength. From here, I did want to point out to you this nice move into industrial stocks, and this is something I've been on the lookout for as the economy continues to expand. Industrials did have a very significant move here earlier in the year. And at this juncture, it does appear to be poised to trade higher, but we're going to get into that a little bit more as to where specifically industrials are seeing a nice turnaround. So from here, let's go ahead and take a look at some of the sub-industry groupings to drill down even further. And so I have a lot of different ETFs that I use, biotech, software, semiconductors, and again, rated by their relative strength. And we can see software up here. This was a relatively bright spot within tech. It pulled back to this 21-day simple moving average, but had a late week recovery. There are a couple of very compelling names among software stocks. And then also we can see an area of weakness with semiconductors. This is all about memory chips. Analyst Wall Street came out this week with a report that there is an oversupply of these DRAM memory chips and an under demand. So the dynamics really push select areas in this group down, but not all areas are negative. We can see the semiconductor index remaining above that 50. So there are still names in there that are poised to outperform the broader market. So from here, I do want to take a quick look with you at bank stocks. They did reverse their downtrend this week. However, a little bit of faltering here toward the end of the week. So let's go ahead from here and take a look at what the driver on that later week deterioration may be. And it is all about interest rates. This is a daily price chart of the 10-year Treasury yield. And these bank stocks tend to do well. Certainly they did during this period. In a rising rate environment, their profit margins are improved. So we did get a nice uptick in interest rates into the beginning of this week, but toward the end it did falter. So we're going to keep an eye on the yields here to see if that move into bank stocks is going to be further impacted. So from here, I'm going to share with you an industry group that is just coming into favor. And then from here, we'll go ahead and look at stocks. This is the Dow Jones Transportation Index. I talked to you about industrial stocks coming into their own, and a lot of it is this downtrend reversal that we're seeing here in transports. And transportation stocks, they are indicative of an expanding economy. You want these stocks to do well as far as broadening out the participation in the market. So we did get that nice break up above this red 50-day simple moving average, nice relative volume there. We had this MACD positive crossover with the RSI trending higher. So this is an area I'll share with you a couple of stocks among the transportations that are really looking quite compelling. So let's go ahead and jump right in from here and do just that. This is JB Hunt, and we can see the stock hit a nice new high up here in May, pulled back, and is now in the throes of forming the right side of a base. So I'm going to go ahead and mark this up very quickly. Couple of other names I want to share with you. So here we are. I talk about these stocks forming bases, and in essence we can see that it is broken back above these simple moving averages. Your outside momentum indicators are positive. So from here I'm on the lookout for a nice base breakout from that 182.5, which would continue to propel the stock higher. A number of these trucking stocks came out with very strong earnings, and certainly from my work, high earnings growth is going to be the big driver of a stock's potential upside advance. So here's Old Dominion Freight Line, and we can see that it did actually hit a new high this week. The company came out with their earnings here at the end of July, gapped up, and was propelled into a nice uptrend and potential further upside. So before leaving trucking stocks, I do want to share with you a transportation logistics company. And this is a stock that has been a big winner in the past with my MEM Edge report. It's XPO Logistics, and we can see that the stock just this week is breaking out of a nice lengthy 6-week base into an uptrend, and we can see your outside momentum indicators, your MACD now in positive territory. as well as your RSI. So look for further upside with this particular stock. From here, I'm going to share with you a couple of rail stocks that are also looking quite attractive. First up is NSC. This is Norfolk Southern, and you can see, similar to the transportation index, it is just now reversing its downtrend. This company did come out with very strong earnings here in late July. However, downward pressure in the industry group really delayed the stock's late response to those very strong earnings. We can see it's now up above that 50-day simple moving average from my work. That indicates the stock's now in an uptrend. Your RSI is positive, as is the MACD. So they did have also a 1.5% yield for those that are interested in higher yielding stocks. Let's take a look at another rail stock. CSX is the ticker symbol, and another company that came out with very strong earnings here in late July. In response to those earnings, the stock had this nice gap up, big volume, but again, broader industry group pressures really had the stock pulling back, and it's not until this week, when the group turned positive, that the stock has really responded to those very strong earnings. 130% year-over-year growth, 40% above estimates. So the stock is now on its way to continue to form the right side of a base. From here, I'm going to go ahead and add a 5-day simple moving average, because when these stocks get going, that's going to be a good area. If we get a pullback to that 5-day, that really would be quite constructive. So I'm going to leave it at that. As a recap, we can see that cyclical areas of the market are continuing to outperform and see money flows. That's where I'm going to be focusing on as far as identifying new candidates. Technology flat for the week, but there are pockets of strength. Next week, we will see retail stocks beginning to report their earnings. Target is up, and I have a number of retail stocks on my watch list that I'll be paying attention to as they continue to roll out their earnings, with an eye toward adding them to my MEM Edge Reports suggested holdings list. Everyone have a great weekend, and I'll see you again next week.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me